at ET Now, we are celebrating the force of 14. 14 years of insightful analysis, top market and corporate voices, and much more. Alongside this journey, we have witnessed the rise of Indian economy, the phenomenal surge in retail participation in the equity markets, and the rise of India on the global stage. And as we celebrate our 14th anniversary, it is time we look back on this journey, reflect on what has worked for India and its growth story, and what needs to be done going ahead. And on this anniversary special, we are joined by special guests. Let's welcome Nilesh Shah, MD Kotak AMC. We also have Sunil Subramaniam, MD and CEO Sundaram Mutual Fund. Let's welcome them on board and discuss what lies ahead for India over the next 14 years. Good evening and welcome to the show. Nilesh, let me come to you first. And 2009 Nifty at some 4,300 levels. Today, we closed at a high above 18,800. Spectacular journey, and what a story of Indian markets. But how would you like to decode this journey, this 14 years journey?
Thank you, Kavita, for having me over here. India's journey is reflected in three things. One, last year, 6 out of top 10 fastest growing cities of the world were in India. Hyderabad, Bangalore, Mumbai, Delhi, Kolkata, Chennai. This trend is likely to continue for many years to come. The state where we sit, Maharashtra, its GDP today is equivalent to what was whole of India's GDP in 2005. In 17 years, Maharashtra has reached where yesterday India was. Over next 17-20 years, will Maharashtra reach where today's India is? Undoubtedly, yes. Our states will become as big as today's India. Finally, apart from and state, it is the corporates which create growth for stock market. We all know how Indian pharma companies, Indian IT companies are dominating global system. This trend is likely to get repeated in many things. Put together this combination of state, city and company, put together this with the combination of India's 3G, earnings growth better than emerging market peers, governance standards superior to emerging market peers, and commitment to green. This is the story of India.
Interesting set of examples there and facts, in fact. But then, Sunil, let's talk about demat accounts. Let's talk about the participation. Now, in 2009, okay, 1.7 crores demat accounts, and now we are at a 7x jump, 11.8 crore. Huge increase in participation. In fact, please decode and analyze and tell us how investors too have changed from 2009 to 2023.
So first of all, a very happy birthday to you now. The second thing, which is that, see, while everybody talks about India's population growth, I think the important thing here, and which is what is going to help us over the next 14 years, is the resilience of the Indian population. I think if you look at this whole demat account jump, and you will realize that COVID was a big trigger in multiplying. Normally in a crisis like COVID, our economy goes backwards, right? But in our case, it actually has promoted the digitalization, the awareness of the equity markets, the number of new people which have come, given the time and space they had in hand during COVID, they put it to use in the equity market. So I think the awareness of the equity markets, the penetration, the mutual fund industry through their program of, mutual fund Sahi Hai has helped this process of increasing awareness. But I would like to compliment ET Now, because I know right from the day, Nikunj and we partnered together in an SIP Sahi Hai campaign. I think ET Now has also been in the forefront of not just selling equities, but to sell the concept of mutual funds, the concept to sell of SIPs, the power of compounding. And I think ET Now has played an important role in creating this whole awareness and converting people away from a government guaranteed fixed deposit which actually destroys value in an inflation to the best inflation beating asset class which is equities done through an experts which is mutual fund through diversification. I think governments to it now also for being part of this journey, and the way forward India is going to be clearly the youngest country in the world for the next 50 years. With all that youth power coming, and if they, and the other thing during COVID, is we are one of the few countries which has seen an increase in per capita GDP through the COVID phase. So actually, by and large, the middle class and upper middle class have become much better off to do, and because they didn't have an opportunity to spend on discretionary consumption, they've been spending more on savings. So you see the mutual fund SIP book has dramatically increased to touching the verge of 15,000 crores a month. So I think it talks phenomenally about the strength of our country in diversifying the capital markets base. And I think this story, we are still at a low double-digit penetration. So I think the next 14 years, we will probably see a much faster growth than we've seen in the previous 14 years. And I think that's where we are at the cusp. And I do wish that he now leads the journey of market expansion.
Thank you so much, Sunil, for those kind words, motivational words. And in fact, thanks to you and to all three of you for being a part of this journey with ET Now. I would also like to welcome P Singh, Deputy MD, SBI Mutual Fund. Good evening and welcome to the show. DP sir, we are talking about last 14 years now. So on ET Now, we say rise with India. What's the kind of India you relate to now as compared to the India 14 years back?
Thank you very much, Kavita. And first of all, heartiest congratulations on your 14th birthday. And as Sunil sir was rightly saying, the ET Now has played a wonderful role during these 14 years. But I wish my dream for the next 14 years is that every household should be a mutual fund investor. Every countryman should be an investor in the mutual fund of the company. And today, what we are seeing is either we are having SIPs or we are having creamy layer investing into the mutual funds. But there's a big mid-valley customers which are not there. We have to bring them in. And as an industry, this is our responsibility. And we are responsible for getting more and more people with the help of our partners, with the help of our distributors, that mutual fund instrument should reach every household in the country.
Nilesh, you've always bet on India's growth story, okay? We've heard you mention the importance of change and the ability to adapt with this change as being one of the key ingredients to success. How India fares on this adaptability of change part? How would you analyze it?
So as Indians, we don't have much room to go down. For us, the only way is up. Second, we are Jugadu people. We have always evolved and adopted. If we see our culture, so many people came from outside, but they all, came together to create today's India. If you look at our technology, we are very frugal, and hence we are in a position to adopt and evolve to the changing needs. Now, clearly, this adoption and evolution is necessary in the world which is rapidly changing with artificial intelligence and machine learning. So as Indians, we truly have to keep pace with the change. As they say, only change is constant in this world. In financial saving, unfortunately, this adoption is not visible. People are investing their savings in gold and real estate. People are investing their savings in collective investment schemes and cryptos. People are spending money on gaming revenues. Clearly, the savings allocation is where Indians have not evolved. There is more money lying in underperforming assets which are underperforming inflation, than in equity mutual funds. Our track record over decades is double-digit return, and people even today haven't given us as much money as they have put it into savings account or CASA account or current account. So as Indians, we truly have to keep pace with the change. As they say, only change is constant in this world. In financial saving, unfortunately, this adoption is not visible. People are investing their savings in gold and real estate. People are spending money on gaming revenues. Clearly, the savings allocation is where Indians have not evolved. There is more money lying in underperforming assets which are underperforming inflation, than in equity mutual funds. Our track record over decades is double-digit return, and people even today haven't given us as much money as they have put it into savings account or CASA account or current account. So clearly, there is a need for adoption in financial investment. Indian savings should be used to support Indian entrepreneurs, and Indian savers should benefit from this tremendous growth story.
Sunil, your view on this?
I think that from a perspective of Indians, right, it's also the fact that we've been an agrarian monsoon-dependent economy, which comes with cyclones and floods and droughts. So our resilience has come from that. That's number one. Number two is the fact is that we have the population which is growing, right? I think what we have is a very good example in terms of China in front of us on how manufacturing drove that country's GDP from to $20 trillion from where it was very close to where India was. So I think for us the template is very well laid out. And I think that with our labor force and the manufacturing, ability to become the capital of manufacturing for the world, and already in services we are among the leading, in terms of the 5% market share. So I think that the twin engine of manufacturing and services with our population rate strength, right, gives the ability of our country to grab a big share of the world's growth. Once the world comes out of this COVID-led slowdown and recession, the boom part of it is where India's growth will be exciting. Today, despite all the world's problems, we are posting this kind of growth rates. But when the world again comes back to the growth path, we will be ideally positioned because in a fast growing world, we'll be the fastest growing market. So it will be a double whammy of that. And so I think that the past 14 years will pale into oblivion if you look at the next 14 years where India is going to go either in terms of GDP or in terms of stock market valuations or in terms of investor wealth. I think that's one thing we can, rest very assured in terms of the basics of the mechanics are already in place for India. We have a proactive government. We have a large population, education, literacy, all of that is great. We have the rapidest state of urbanization. I think the path is very, very clear for India that, it's only going to be growth and more growth.
So not only are the triggers and the factors are very strong over here, but also the Indian markets have matured. And DP, sir, how would you like to explain this? Because we've seen Indian markets digesting major triggers and news that could have led to a huger fall in the markets, but the markets just have shrugged it off and moved on. What kind of market maturity are we talking about over here?
See, you have to understand, Kavita, that say in Indian market we have seen the resilience in a big way. And the last 10 years, when domestic institutional investors they have gotten in a big way. For we are dependence on foreign institutional investors have come down heavily. And today again we are almost sitting at a $600 billion foreign exchange reserves. And the next 14 years are going to be very glorious year for all of us. And the next 14 years, 14 trillion economy is very much visible. And see, as far as maturity of the market is concerned, that is evident from the fact whenever the market is going up, there's no rush of people putting in money, and when the market is going down, the huge money is coming in. I think this simple example and simple math tells us the maturity of the market. So that's where we are today, and more people are joining the bandwagon of investment journey. Except for some disruptions which do come in because of some interventions here and there. Otherwise, this industry, this investment scenario, this market will continue to grow, and there cannot be better example of the shining India, whatever is there today. When everything looks so rosy, of course we should be cautious. We should be cautious of whatever is happening around us, but things look much better, and the maturity is visible from the math itself.
All right, so I'm going to take a quick break, and post that I'll be questioning all three of you on a theme called Kal, Aaj or Kal. And what exactly will this be? We will tell our viewers after this break. Welcome back. You're watching The Money Show with me, Kavita Thapliyar, and this is our 18th anniversary special. With me is DP Singh, Nilesh Shah, and Sunil Subramaniam. Alright, one very interesting round of questioning, and Nilesh, let's begin with you. So, I want to focus on something called as Kal, Aaj or Kal, and this question will be asked to all of you. Companies and sectors which were the success stories of last 14 years, and companies and sectors which will be emerging as success stories in next 14 years. Nilesh, we'll start with you.
So Kavita, sector और company से ज़्यादा we have to focus on management and governance. कल भी management and governance were driving the value creation. आज भी management and governance is driving value creation. और कल भी management and governance will drive value creation. You have to always focus upon good managers who have vision, who will convert that vision through execution, and most importantly, who will follow the path of governance and not cheat minority shareholders. Industries will go up and down, economy cycle will go up and down, but if you are with a good promoter who is having a vision, who is executing that vision, and who is fair to minority shareholders, you will always make money.
Brilliant. Sunil, what's your take on this?
So for me, the previous 14 years has probably been a service-driven economy that has driven India. So I think the next 14 years you will see manufacturing take the lead. So I think fundamentally we'll see this migration from services plus agriculture into manufacturing with a diminishing role for agriculture. That's number one. Number two is those companies which take advantage of three key themes. First is renewable energy. I think India is the fastest growing, is probably also taking the leadership in green energy and converting our oil and carbon requirements into hydrogen and solar. So those companies take advantage, will probably take the leadership and be the big multi-baggers, number one. Number two, those which are taking advantage of the rapid digitalization. The internet penetration of India is already the fastest growing, and that digitalization will open up new frontiers, and those companies which are at the forefront of that will take the benefit. The third, as I mentioned, manufacturing, but within that, I think artificial intelligence is transforming the way goods are manufactured. You have 3D printing, you have so much new things happening. So I think AI and even India's IT leadership, I think in the AI space for us to become leaders. So I think these are the three key themes in my thing over the next 14 years will take India into one of the top three countries in the world. So from a bipolar world where US and China are dominating, we will be in a tripolar world where US, China and India will be the triumvirate ruling the world.
DP sir, your take. DP sir? DP sir, am I audible?
I'm not able to hear you.
Are you able to hear me now?
Yeah, I can hear you.
Alright, so companies and sectors, success stories in last 14 years and the coming 14 years.
No, I absolutely echo what Nilesh bhai said earlier. It's evolving world, things will keep on changing. Whatever was looking very good 14 years ago is not looking good today, and whatever is looking good today may not be anything. And what Mr. Subramaniam has also said, the AI, the green energy, the hydrogen energy, the new things will keep on emerging. Right? The EV is another on the auto sector, but I am not taking it because ultimately it depends upon the good businesses and good managements. That's the key. And moreover, in the next 14 years, we have to master ourselves in not only investing, but also master ourselves where not to invest. That is a key role of us as an industry. I think we will master ourselves much more than choosing where not to invest rather than investing. Investing, of course, we have to find the ways and means. And next 14 years, I think the experts in this industry will evolve much more than what it has happened during the last 14 years. And we are in a very sweet spot, and we will be able to add value in the investors' kitty.
Exactly, and we just hope to see the rise of Indian retail investors even more from now. Thank you so much, all three of you, for being on the show and making this anniversary special, all the more special with all your views and guidance to our viewers. Thank you so much. All right, we move on.